Hi guys, welcome to my YouTube channel. Here I am back with another informative video. So the topic of discussion is Solo 401k Mega Backdoor Roth Strategy of tax-free wealth building. So first of all, we will discuss that what is a mega backdoor Roth. Not everyone is eligible for this conversion strategy. The key takeaways in this topic are a mega backdoor Roth strategy can potentially allow some people to save more in a Roth IRA and a Roth 401k than they otherwise would be able to. Whether or not the strategy is available to you depends on specific features of your 401k and the other workplace retirement plans. If your plan permits it and you are considering using the strategy, be sure to understand the potential tax implications and consider whether it makes sense in the context of your other financial goals. If you are ever gone online and researched ways to save more for the retirement in general or save more in Roth IRA in particular, you may have come across a strategy commonly referred to as mega backdoor Roth. So how do this strategy work, and it is potentially an option in your situation? Read on for more. So what is a mega backdoor Roth? A mega backdoor Roth refers to a strategy that can potentially allow some people who would be ineligible to contribute to a Roth account based on their income and contribution limit to transfer certain types of 401k contributions into a Roth, including a Roth IRA or a Roth 401k. If available, the strategy can be particularly useful for those who earn too much to contribute to a Roth IRA directly. If you earn $1,65,000 or more as a single taxpayer, or $2,46,000 or more as a married filing jointly taxpayer, they can't contribute anything directly to a Roth IRA in the 2025 tax year. So how does a mega backdoor Roth works? Put very simply, the mega backdoor Roth strategy entails two steps. The first step is making after-tax contributions to your 401k and the other workplace retirement plan. And then the second step is then doing a conversion either to a Roth IRA or a Roth 401k. Note that not all plans allow these steps. More details are on the below. Let's break down those two steps. First, it's important to understand that the strategy starts with a specific type of contribution, that is after tax 401k contributions. And after tax 401k contribution is different from a Roth 401k contribution and different from a pre-tax contribution, which is often the default option with a 401k. Why does it start with after tax contributions? Because after tax contribution may enable you to save in your workplace retirement plan beyond the annual contribution limit for the pre-tax and Roth contributions. Here's a look at how that breaks down. Type of 401k contributions are pre-tax. Tax treatment contains contribute pre-tax upon withdrawal in retirement, then pay ordinary income taxes on contributions and then earnings. Then comes the point of Roth. It includes contribute after tax upon withdrawal in retirement, pay no taxes or contribution on earning. Then after tax contribute after tax upon withdrawal in retirement, pay no taxes on contributions and pay ordinary income taxes on earnings. Then the employer contributions made on tax deferred or after tax basis. Then for the year 2025 tax year, savers age 50 to 59 are eligible for the additional 7,500 in catch-up contribution for a total of $31,000 in pre-tax and or Roth contributions, and a total of 77,500 dollars in all types of contributions combined. Savers age 60 to 63 are eligible for a higher catch-up contribution limit of $11,250 in 2025 for a total of $34,750 in pre-tax and or Roth comprised of employer contributions and limit apply to the underlying composition of the contributions. As you can see, if you only make pre-tax or the Roth contributions, when the most you can contribute is $23,500 or $31,000 if age is between 50 to 59, and $34,750 if the age is 60 to 63. With after tax contributions, you may be able to increase the total amount saved to $70,000 and $81,250 for those who age 60 to 63. And although any amount contributed by your employer would count towards that limit. However, after tax contributions can come with some downsides. One key drawback is that when you make withdrawal in retirement, any earning will be taxed at ordinary income rate, and depending on your plan, after tax contributions may not be eligible for an employer match. That brings us to steps of the mega backdoor strategy: converting the after tax contribution to a Roth account. If you have a Roth option within your retirement plan, you may be able to convert the after tax 401k amount to a Roth 401k. This is called an in-plan Roth conversion, or if your plan allows it, you may be able to roll after tax contributions to a Roth IRA. Prorated earnings attributed to the original contributions can be rolled to the Roth IRA, incurring taxes, or separately directed to a traditional IRA without incurring taxes. Whether you convert to a Roth IRA or a Roth 401k, you will need to pay taxes on any earning included in the conversion. You will not generally need to pay taxes on the contributions you convert, as those amounts have already been taxed. A tax professional can advise you on a potential tax impacts of the strategy on your situation. Are you eligible for a mega backdoor Roth? Whether you are eligible for a mega backdoor Roth depends on the specific of your workplace retirement plan. Here's what plans generally must permit in order to use the strategy. The plan must permit after tax contribution. Then the first point is a Roth 401k with the option for in plan Roth conversion and in service withdrawals or after tax contributions plus attributed prorated earnings. Plan features can vary widely. For example, many people do not permit in service withdrawals, which means taking a distribution from your 401k while you are still employed. Then, how to set up a mega backdoor Roth? If you are considering trying to set up a mega backdoor Roth for yourself, the first step may be to check the details of your workplace retirement plan to make sure that if it offers the features and that you are eligible for the strategy. The next step may be consult a tax or a financial professional to see if the strategy makes sense in your situation and to better understand the impacts on your taxes and plannings. If you determine that it is permissible and appropriate in your situation, then you can set up one by making after tax contribution to 401k and periodically rolling those contributions via a rollover distribution to a Roth IRA and doing an in plan conversion to a Roth 401k. Some employers even offer an auto convert feature inside their plans, in which case participants can set it up so that any after tax contributions are automatically converted to a Roth at regular intervals. So, talking about, is a mega backdoor Roth worth it? So, whether the mega backdoor Roth strategy is worth it in your situation can depend on the range of the factors. Some issues to consider include whether it is allowed to under your workplace retirement plans. The second point is how much you are actually saving for the retirement. Then, what are other financial goals you have, your current rate versus your potential tax rate in the retirement, how a Roth would impact your taxes for the year in which you convert. So that was all about the topic. Hope the topic has been beneficial for you. So do subscribe the channel for more informational videos.